All right. So greetings, everybody. How are you guys doing?
Good,
Very
good.
good.
All right, amazing. I am Bib Bene from the Congo. I am happy to be here. I'm very excited to be presenting this topic to you guys, and the topic is the power of life insurance. And you guys know that this month is Life Insurance Awareness Month.
Yes, we do.
No,
Did
I
you
did-
know that?
no, I didn't know.
Not initially, but we find out. I found out
Okay,
during the meetings.
fantastic. So each month, usually we celebrate something. I believe last month was, I think it was about black businesses, if my memory is right. So each month, we celebrate something that happening in the world or some piece of element. As it's the Women Month, you ladies have your month. I don't think guys have their months, but it's okay. You guys, so this month is Life Insurance Awareness Month, and my topic is here, the power of life insurance. All right, I'm going to share my screen with you, and the screen's contents are a few slides, and the slide it allows you guys to actually have visuals, and I will be explaining some of the visuals, and eventually allow me to ask you a few questions. So this talk it's more interactive versus me speaking, giving you guys a lecture. All right.
Yep.
Does that sounds good?
Sounds good to me.
Okay, let's do it. Just bear with me. All right, can everybody see my screen?
Yes.
Okay, so as you can see on my screen, my statement in the beginning for my family and for your family as well. So my family here is what I live for. I'm sure everybody who have kids, they live for their families. You are shaping the future of your family. You care about your family each day. You think about what's going to happen to your kids or your loved one in 5, 10, 15 years, 20 years. So September, we talk a lot about already about this Life Insurance Awareness Month and the power of life insurance. So this is what we're gonna cover. Who am I? I am Bib. I call myself the financial artist. Why financial artist? For some people, most people who know me, they know me as the performing artist because I am a dance. I do dance. I do theater. I do a little bit of movie. I've been in a few movies, like mostly shorts, and also I am a writer. I have participated in many writing contests when I was back in the Congo and France. I have won a few awards in writing, and that's poetry and shorts. I studied my first novel, but I got lost when I moved to the United States. It's stuck somewhere, but I'm gonna come to it to finish my first novel. That's gonna happen. So I'm a producer in the field of arts. As I have a festival which is a dance, music, spoken word, and visual arts festival. And it's an international festival. People come from all over the world to come in San Francisco, in the Bay Area, California, to participate in the festival. But I have an MFA, which is a master's in fine arts. So I did a master's in fine arts. But before doing that, I also have a background in finance. My initial studies was in finance in Congo, University Mariengwabi, the only one we have. I have a bachelor's in science, economics, BS, and also a master's in finance. Eventually, I did not use it because the dream back then was to work in a financial, in a bank, in a financial industry, but that was mostly to satisfy my father because I passed my classes, but that was okay. I was, I was a curious person. Everything I touched, I loved it, and I did it, and I did it 100%. I didn't do halfway, and I succeeded pretty much in everything. So right after completing my master's, I was selected for a dance contest in Paris. I went in Paris. I won 2 awards actually, and then from winning those prizes, I started traveling the world. I've been literally perform all over the world, the Asia, all continents, and eventually when I moved to the United States, I had performed already for a long time, so I didn't see myself working in a bank. But recently, reconnecting with the world of finance, it was just to respond to the need of the communities, to help families, to help people in my, African communities to become a little more smart with money, basically saving money, investing money, protecting the money, just in a way to guarantee the future. Well, would you agree with me that saving money is very important for ourselves and family?
Yes.
So that's the mindset we are here. The goal for me is to encourage people to save money, but saving money doesn't suffice by itself. Saving money, where you save money also is important. So really, I teach folks the ways, what are the options they have, the proper ways they can save money. Because if you save money in the bank, you just let your money sit there. You remember, guys, when we were little kids, we used to have piggy banks.
Yeah.
You remember anybody here had a piggy bank?
Yeah, made out of wood.
Made out of wood. We come from the Congo. We had piggy banks made out of wood. And eventually, when we became adults, many people lost that. Many people thought having a piggy bank is only for children. A piggy bank is just a way of teaching us about saving. So now as adults, we save money, not in a piggy bank, while we save money where the money can work for us. So anyways, that in short, what I do. And eventually for you guys here is the power, we talk about the power of choice. Those things I talk about initially, it's basically showing the people in the communities about the options. When they want to save money, where they save money matters, and which companies save money matters as well. And when we save money here, you're saving money in different financial plans or different financial products. So as a non-captive financial professional, non-captive just means I don't work with one particular company. I have the ability, I'm appointed with multiple companies in the United States and Canada. So these companies have different financial services and products that can cater to any family depending on the financial goals. So I'm able, knowing what exists in the market, I'm able to go offer those options to the families. Just tell them, you know what, these are your financial goals. Either it's retirement, either it's life insurance, either it's whatever that is, or whatever investment, mutual fund, index funds, this company has your best interest. And we bring those companies to do the families versus bringing families to the company. So we reverse it. That's what the non-captive agent does. He's really open to shopping for families out there. I love it. It's pretty amazing. So let's talk about life insurance. Okay, before I go, I'm gonna go back here. I need to ask you guys a question. When I say life insurance, what comes in your mind? Anybody can define life insurance for me?
For me, when I think about life insurance, I always had the notion about money that I'm gonna get after something happened to if some money that's gonna be there for my kids or the people that's gonna be there if something happened to me.
Anyone else want to contribute to that?
Yeah, I think for me it's the same. It's money that comes after death, after someone dies. It's nothing that has to do with life. It's
Okay, fantastic. I like what you say. It's nothing to do with life, but we called it life insurance. How can we should have just called it death insurance? Well, we call something life insurance, and then it's only when death happens. Okay, so that's you all that's the traditional definition of life insurance. Traditional definition is exactly what you guys talk, but it's eventually it's a contract between you, the individual, and a company that guarantees to honor a contract by giving a sum of money, whatever the value of your account is, or your policy is. They give that sum of money if you were to pass. That's the traditional definition of life insurance. And eventually the contract, for the contract to be enforceable, the life insurance application might be accurately disclosed, and the insured past and current health conditions and high risk activities. And what does that mean? Does that mean we can talk about life insurance, but not everybody qualifies for life insurance. Once you get to learn about the benefits, I'm going to tell you about the power of life insurance. When you get to understand it, as much as it's powerful, as much as you guys can benefit for you, as much as you can protect your family, but the companies out there too need to protect themselves. because if you have health conditions, you know you're gonna die tomorrow and want to acquire life insurance today, you want to have a life insurance for a value of $1 million, the company, you may put the company at risk, you knowing your health, you're dying tomorrow or in a week, and then you acquire life insurance in a value of $1 million, and then you pass. That's $1 million that the company is going to pay to your family. You see, you're going to leave wealth behind. You know you were going to pass. So the company has to understand, make sure that you are not about to pass tomorrow, that you're going to be contributing to this policy for a certain number of years. Even if in the long run, you're always the winner, but the company needs at least to get something that's working. And eventually, some people may ask, well, where are the companies making end meet? Well, you're not the only ones. The companies are working with millions and millions of people, right? So it's just what it is. In the long run, you're always the winner, but the companies just want to make sure that you are your health, you are eligible. You may be eligible based on the certain criteria. Each company have their own criteria about how they can open this account for you. So that's basically what it is. I'm going to share this very short video for you guys. It's short video, and I will tell you the reason why I am sharing this video. Can you guys see my screen?
Yeah.
Yes.
Hi,
Okay.
I'm Anthony Anderson, and on TV, I play a dad who has it all. But in real life, I grew up in a very different neighborhood. My parents worked hard for everything we had, but one key thing I learned from them was to take care of the future. They understood that tomorrow isn't promised to anyone. That's why they each had life insurance. And when I turned 18, I got a policy too. This is what I don't understand. If we could do it on our limited income, why are there over 100 million Americans without life insurance? Wouldn't you want to make sure your family is okay if something happened to you? I mean, you insure your high-def big screen, but not the person watching. What's up with that? Where's your family's safety net? If you can buy a latte now and then, you can pay for a life insurance policy. It's that affordable. As a husband and a father, I understand why my parents made it a priority. You should too. Join me in taking care of our family's futures. Learn more at lifehappens.org.
Okay. Do you guys know the actor?
Yeah.
Okay, that's Anthony. So he's in a million movies out there, Hollywood star. So my question to you guys, who has a car? You guys have a car?
Yes.
Do you have insurance on your car?
You have to.
You have to. Okay, who has a TV? Do you have insurance on your TV?
Yes.
When you buy it, they do offer it. Yeah.
All right. Who has a home? Who's renting a home? I'm sure nobody's living on streets, right?
Yeah.
I hope so. Let me know if you're on street. Let me know. I can help you guys out. We don't want anybody on streets, okay? So, are you paying for home insurance?
Yeah.
Yes.
All right, fantastic. Is that the case for you as well, Remy?
Yes, the same. Yeah, you have to have some apartment now that require a home insurance. Yeah.
Okay, fantastic. Now, who has health insurance?
Hmm?
Pretty much everybody.
Health
We do.
insurance.
We all do. We all have to have it, right? In one
Oh.
way or the other. Yeah.
Fantastic. So let's talk about life insurance now, because health insurance, life insurance different. But who has life insurance?
No one.
Okay, you don't have life insurance yet, correct?
Yeah. Yeah.
Okay, not yet. So let's talk about, as we move forward, we're gonna discover the power of life insurance, because if we can protect our TV, those are material stuff, okay? Material belongings. You got a material belongings such as a car, a home, and TV. You are protecting your TV, you are insuring your TV, but you are forgetting to insure yourself. So I think your body, yourself, you are more important than the car. You are more important than TV. You are more important even than the home that you live in. So that's something that most people don't think about. How can I be insuring a TV, be insuring a car, because it's mandatory, but you don't think it's mandatory for yourself to insure yourself just because they don't make it mandatory. That's something that has to click for most of people. So, but however, we're gonna see the mindset behind it. We're gonna see why many people don't have the education or just don't see value in life insurance. So for the next few minutes, these are just a bunch of factual slides about statistics. When I'm not gonna read all of it, I'm gonna give you a few seconds to kind of read through it, and eventually I may read one thing, but I'll leave you guys just a few seconds to read on the slide, because you gotta make sure this information that you're getting serves you, but the information doesn't not just to serve you guys. The information also has to serve the people around you, the people that you know, your family members, your friends, or anybody you meet on the street. If you make an acquaintance, always get into the habit of talking about some aspect of life, some important aspect of life. And we as being active in this in the industry, being as a forefront actors, we gotta make sure we understand these facts, and also we gotta make sure we can make those facts our crusade and educate folks about some of the value we are getting today. Does that sound right?
Yeah.
Yeah.
Okay, let's go. I'll let you give you a few seconds to read. Okay, are we all good?
Yep.
So,
Yes.
I'm sorry. So you can see in this last, the last section of the slides where we say every life has value and it's worth protecting. If an emergency were to happen, life insurance proceeds can help you pay for. These are all kinds of the things life insurance can pay for: your funeral costs, for bills ongoing, and ongoing expenses, outstanding debt, funeral needs, education, spouses. So basically, you can have life insurance policy depending on your priorities. You can dictate what you need the policy to pay for. Isn't that powerful?
Yeah.
Okay, so you have to understand life insurance is a transfer of risk. That's pretty much another definition of life insurance. It's a transfer of risk. I don't want to pay for it in this amount. I don't want to deal with it. I'm going to let the company deal with it. So whatever risk I may not take on me, I will let the company does it. That's what they do the job. So you're transferring the risk from you to an insurer. And then, can anybody read this slide? I mean, just the first percentage there.
Okay. 31% say they're more likely to buy life insurance because of the pandemic. Oh yeah, that makes sense.
So the pandemic, guys, has hit coronavirus. Right now, coronavirus is in the news. It's been on the news since last December. December 2019 when it started in China. And I think we start talking about since November or October 2019 because it was in China. And then China, it went on to decimating people in Europe. Italy got hit, Spain got hit. The United States, where, they took, we had an interesting president. So it took a little while until they came into the United States. Since then, the entire planet has been talking about coronavirus. So the pandemic hit. People realize, a lot of people from losing family members, a lot of folks realize those family members who did not have life insurance, they left behind lots of poverty. And people are talking about it these days because of the disaster that happened. People passed away and leaving behind poverty, not having plans, leaving behind children. There are millions and millions of such cases like that. So you can see the COVID-19 has affected the workers' access to life insurance benefit. So these are just statistics. Again, I'm going to leave you a few seconds to read it on your own. But to summarize, it's just there's been a more awareness about life insurance, especially from the families lost or those who have witnessed of those who have passed and without leaving behind debts that the family sometimes have to pay for, because when you leave all of that, and then the whoever provider or the institution that you borrowed money from, they can come after your family. So you're leaving debt behind, the family has to pay for it. But if you don't leave money, and then that's just becomes such a burden for a family. So imagine having a $1 million policy or $500,000 policy. The family, not only you are living peace of mind, but they're able to take care of your debts. They'll be able to take care of your funerals, and then they're still gonna have lots of money to give them peace, so they cannot worry about, they can just grieve in peace. That's just what happens. So take a few seconds to see what's happening in the marketplace right now, and then we're gonna continue. I'm gonna continue elaborating on my about the importance and the power of life insurance. Are we all good? So these are statistics. You can see the numbers. And if I go down here, this statistic continues about just how people are becoming more aware into acquiring these policies. And you can find the statistic on LIMRA websites, and any legit website out there. It can also be in the FINRA. You can find some factual information. I like to give this fact so folks know that I'm not making stuff up. Okay, people don't understand. I'm not making stuff up. The reality is real. The facts are there. And they have people actually will go out there, they conduct surveys, they ask families, and they see what's going on, and they get to record records from hospitals. All right, they work in communities, they work in a community center, they record, they question people, women and men, and people of all kinds of communities, so they can have this information available for us, especially for us in the industry, to look at and see what's going on. Okay, so I'm gonna ask someone to read the second paragraph right here. The second paragraph. Can I have someone read the second paragraph here, please?
Of the adults that only have life insurance through their employer, over half, 55%, believe that the amount they obtain through work provides them with enough coverage. However, the median basic coverage offered at the workplace is either a flat sum of $20,000 or one-time salary, far less than experts recommend.
How does that resonate to you?
They're cheating us when you're at work.
And it's amazing because 95% of people, or 90% of the people, when I'm talking to family, I ask them, do you have life insurance? They will say, yes.
Through work. Yeah.
And if they're working, they say, I have it for work. And when I ask them, what do you know about your policy? The next question is, the answer is always, I'm not sure. They don't know. They don't know the policy. They don't know the policy value. They don't know the policy number. They don't know anything about it. They just know they have some kind of life insurance. So when you look at this number, if you were to pass, you have $20,000 that you leave behind for your family. How long can your family live out of $20,000?
Not even a year, especially now.
That's not even a yearly salary for someone who has a family. If you're single, you may manage to live with it, eating burritos every day, something like that. I'm joking. That's a joke. Okay, don't take my word for it. But the disaster is just when you don't realize what the companies are offering, it becomes just a fancy name, life insurance. But once you don't know and you don't want to take control of that, that's where it's going to hurt, because you don't understand the power of it, and you don't making plans for life insurance to actually properly protect your family and leave a legacy for your family. Is that making sense? So Let's keep going. And these are more factors, more statistics here. So we talked about in the beginning, our life insurance in the time of COVID. Our job here, or my job, even if COVID has created a little bit more awareness on how people are changing their mindset about life insurance, and how many people are actually acquiring life insurance during the pandemic. Do you guys know this athlete, this basketball player? His name was Kobe Bryant.
Yeah.
Yes.
When Kobe Bryant passed, in that crash with his daughter Gigi and also the other victims, God bless have the soul. But did you know? Even myself, I was shocked. I didn't know the guy. I'm not that much of a fan of a basketball, but just the idea of a father and fathers and mothers and children passing away at the same time in a helicopter crash, that's hurtful. That's painful. Now, what's coming next year is knowing, even if the guy was wealthy, we know he was a millionaire, multi-millionaire, but imagine something like that happened and he left behind the children, or they left those who didn't crash, they didn't have life insurance. And that event triggered too many people to go rush and acquire life insurance. If you guys don't know, just such an event, seeing a superstar passing, and then what happens next is people becoming fearful, almost fearful, and want to protect themselves. Is that making sense, guys? So if they're doing it, it's for you guys to think about protecting your family as well. So again, this information, it's public information. You can find it on LIMRA. And this is just some of the mindset, what consumers buy or don't buy life insurance. So can I ask, okay, this is something you may want to answer or not, Paul. So you say you don't have life insurance yet, right?
Yet, no, I don't.
Okay, can you tell me one of the reasons why you have not acquired a policy for yourself yet?
In all honesty, I don't have a good reason, because I've known people around me who decided to get it. I guess I just never really I don't know. I think part of it, I think I told you my background. When I had that experience with that company that I was working for, I just hated so much that I stepped away from it. I was like, I don't want to do anything that had to do with life insurance. It's a scam. But in the back of my head, I knew also that it's something that you should have. But it was more, like I said also earlier, related to death. So I think I never just seriously thought about it. Like, okay, maybe I should think about what it may do for me. I never did that.
Fantastic. Can I ask, thanks a lot for sharing. I really appreciate it. And Remy, may I ask you the same question? Why haven't you acquired a life insurance policy for yourself yet?
I think I do. I probably do with my job. Well, I know with Cisco, probably when I used to work for Cisco, I think we did have a life insurance, and I did sign up for that because I was eligible for that, but I quite don't remember. But I think it's the same thing, like she said, kind of the same thing. It's like you never actually think about it. Something has to do with death. When you're alive, you don't really have, you don't think about death. So to get an insurance, a life insurance, I guess not a lot of people think about it because it's on something that we always think is like, okay, when you die, well, you're dead. So what do you need a life insurance if you're gonna die? But it's basically not for you. When you choose your life insurance, it's not for you. It's for the people that you leave behind you, your kids, or like you say, your wife or spouse. It's not really for you. So you're actually getting life insurance for those people. So that way, when you're gone, they're all taken care of. So that's why how people see a life insurance, they don't really see it as like, okay, I don't need it. because I'm alive. So,
Yeah, I agree.
Yeah, thanks
Right.
for your answer. Yes, that's among many reasons. That's one some of them. And especially if you're single, you feel like, hey, you know what, I'm not gonna do this. I'm gonna live until I'm 100 years
Yeah.
old. Even if I pass, I don't want someone else. I don't know you well like that to to access the money. But that's the really
Yes.
traditional way of thinking. And especially if you're quiet from your job, it's not intentional. The job offers that you feel like, okay, well, I can sign up for it. I qualify for you, just take it, right? Usually it's like
Yes.
that. It's not something you've thought about it. It's just the job talked to you about it. Like that was probably the first time they even talked to you about it. And then when you sign up for it, you also forgot about it that right there on the spot. Okay, so these are some of the concept, the mindset around how people get covered. You can see, so I'm not reading anything on screen. Just take a few seconds to read what's on my slide here about some of the reason that has been actually already said.
So what are we supposed to do?
It's just a read, just a read, just a read. I like to give our folks time to actually dive into the slide. So to have a little bit of the visuals are very important. And then I elaborate, I break it down for you guys about some of this mindset and why people are either they don't have the knowledge or so. Okay, fantastic, you guys. So it all has to do with knowledge, access to information. So if you don't have the proper education about life insurance, we're gonna go with the superstitions around it. Death, nobody wanna talk to you about death because we think about death, when I grow old, life happens. Life happens. And understand the education around life insurance, understanding as you saw previously, what it can do for you. It's not just for death, right? So now let's keep moving and I'll elaborate and break down for you guys today. We talk about knowledge around, and these are all statistics. I'm gonna kind of skip through it. So we are living a new era, the pandemic and all this 2020, 21st century. We know with the rise of social media, internet first and social media, things are being transformed. People are living in what are called the matrix. The matrix is your social media. The Facebook and LinkedIn, TikTok, and eventually the YouTube University. YouTube University, where you can go access millions information, and those that are factuals and the information that are factual or not. Okay, but there are a lot of professionals in the field. They're all in university. So isn't that amazing? Like social media has changed the way people learn about life insurance. Just in the recent years. So, and this is not just apply for life insurance. It applies to many fields of our modern life that you can have, because what we're doing here, I have a YouTube channel. Many people have YouTube channels. So if I cannot teach in a college or in school, where everybody just turning towards social media to actually follow these professionals. So when you follow professionals that who have credentials and credibility, you can learn all about pretty much anything, right?
Anything.
Pretty much about anything. You have to know about if the person or the information that you're following is credible, right? Okay,
yes.
So now I'm sharing my screen here so I can tell you guys about what people don't know about life insurance. Did you guys know there were two types of life insurance and subtypes of life insurance? What all the definitions you guys given me in the beginning was about you guys were defining traditional life insurance, which means the old type of life insurance. The traditional is you acquire life insurance for a certain period of time. It just when you pass, your beneficiary goes, the money goes to your beneficiary. Is that correct?
Yes.
Okay. So, however, that's so outdated. Thinking about life insurance in that manner, in that way, is so outdated, and that's discouraged pretty much. That's discouraged a big percentage of people to acquire it, especially when you're single. You don't feel you have a sense of responsibility. If you think about it, oh, you know what, I'm gonna put money aside, and then somebody gonna take my money, my hard work, the money I worked so hard for, I'm not gonna do it. But when you understand a new type of life insurance, we have a term on one side and the perm, which just means permanent in the other side. This term, with some companies we work with in the industry, it comes with lots of benefits. And some of the benefits, what we call the living benefits. We call it life insurance. We don't call it death insurance, right? So this type of new policy, you can actually access your money while you are alive. In a case, because we said life happens, in a case of critical, chronic, or terminal illness, you are able to access a portion of your money to offset those expenses. You're gonna get taken care of. And last year, COVID hit, some people were able to actually access the money to pay someone or pay even the mortgage. You'll be able to pay the mortgage, just accessing money in your policy, depending on the value of the policy, if you understood the power of it. That's what it gives you. In term, it just means you can acquire it for 10 years and 30 years. However, in this new type, you have what we call convertibility. After 5 years, you may decide to convert your policy into a permanent policy. That's an option that you have. And also before term, if you decided to extend it, you could extend your policy. Those are some of the benefit that comes to with this new term, these new types of life insurance. And eventually, term has still an expiration date, right? At some point, you're gonna have to, it's gonna expire. But permanent, there is no expiration date. So the power here is always, if you have the means, it's always good to be combining both a term and a permanent policy. So what is a permanent policy? You got four types of permanent policy here. You have a whole life, universal life, variable universal life, and an index universal life. In a whole life, these are amazing policies. Eventually, when I get to break it down as we coming in a few slides coming down, you understand, you're gonna get blown away. You understand, oh man, how come a simple life insurance policy can turn into a bank for yourself? I swear to God, you can use life insurance as a personal bank, as a personal family bank. I'm gonna show you in just a minute. In all life, what comes with it, like in traditionally death benefits, that's what makes a life insurance is death benefit. However, a portion of the your money is invested in the stock market, or is tracking a few indexes or tracking a few companies in the stock market to generate some dividends. And the dividends, that's the money that's being accruing into your policy to allow you to have access to liquidity on top of the death benefit that you have. So it provides you a dividend. Eventually, there are contributions. In all life, the contributions are fixed. If you're putting a certain amount, you cannot change it. And then on the other side, you have a variable life. In a variable, it comes with the same benefits as a whole. You have death benefit, you have cash value. Here now you have flexible premium, but the returns are a little lower than whole life. And then you have variable, you got some of the same benefits, but the difference between whole life and universal, your whole life, your variable, your money is strictly, that portion of your money of your policy is strictly invested in the stock market, which means it's going to be performing based on the fluctuations on the market. It goes up, it goes down, it goes up. And I am not strong on that. So there is nothing bad with it. It can be as a financial strategy, but I am strong on index universal life because I don't like to lose money. So when you understand the power index universal life, there is all those that protection. It gives you protections, it secures you, and there is a term we use, market correction protection. Market correction protection, you just guaranteed to never lose money inside the portion of the policy that is participating in the market. Is that making sense? Is that making sense to everyone? Everybody's following me right now?
Yes, we are.
Okay, fantastic. So let's keep going here. I talk about chronic illness, critical illness, terminal illness. These are some of the differences, just so you can know. Critical illness Critically ill means you've been diagnosed with a health condition such as heart attack, stroke, cancer, end-stage renal failure, ALS, a major organ plant, blindness, a paralysis resulting from specific underlying conditions. And you have chronic illness, just means you're no longer able to perform without substantial assistance from another person for a period of at least 3 months. At least 2 of the 6 activities of the daily living, or you require substantial supervision by another person for a period of at least 3 months, okay? And then terminal illness, basically you have less than 12 months to pass. So the reason why I'm showing you this, life insurance, what I showed you, the new tab with all the benefits that come with it, you still have to qualify for them. When you are young and healthy, because most people think like, oh, you know, life insurance, death, I need to get old so I can acquire them. That's not the case. You don't need to be old, especially the new time I'm telling you that you can actually use it as your personal bank, but you have to qualify for it. Yes, right now with the pandemic, we have some companies that are giving some, they are bypassing the medical exams, but you have to go for a medical exam. And once you pass the medical exam, you have your contract signed, your policies approved, then you can see your wealth and all this the strategy that when you work with us financial professionals, we strategize or we structure your policy to the way you cater to your financial goals. And your health, being healthy is a major component of you having this access to this policy. And I'm gonna tell you again why. Let's keep going. Many people think that acquiring a life insurance policy is expensive. Haven't you guys had some thought like that? Like, oh, you know, for me to acquire this policy, I have to pay lots of money. Haven't you ever think about something like that, Remy?
Yeah.
Haven't you had that thought that you, for me, I mean, I'm gonna access the policy life insurance, I have to pay its cost, so it's so expensive. You never thought about it as an expensive product to acquire?
Yeah, I mean, yeah, you always like, man, it's gonna be expensive because I mean, I always thought it's something that's gonna be really expensive. So
A lot. We read the statistic on the beginning of my presentation. We saw some of the mindset behind people or that prevents people to not acquire life insurance. They always think about costs. And you know what? At some degree of maturity, I always say people, you know, you question cost in the absence of value. You question cost in the absence of value. If something is not valuable to you, you start questioning cost. Now look at, this is an illustration here. You have some quotes and figures here. I just make this name up. It's a Rick Bob. I just, you know, this is not a real person, you guys. It's an example. It's a female. I take age is 30, okay? So imagine this person who's 30 years old is acquiring a term living benefits. I told you about what term living benefit meant.
Mm-hmm.
So with a policy value of $500,000, this person can acquire a term, either it's 10 years, 15 years, 20 years, 25, all the way up to 30 years. If you want to contribute monthly or quarterly, semi-annual or annually, with just, if it's 10 years, let's go there. Do you see with just $12 a month?
Wow.
Just $12 a month, you can have a policy that can protect you and the family in a value of $500,000 with living benefits.
No.
That's how people get killed too.
Yeah, of course, you're not gonna run around be telling people.
Yeah, you better not. If your beneficiary shouldn't know.
Don't be running around telling people about these things, okay?
Sorry, I'm being dark here.
No, I understand. No, you're not. It's true, because when you read about the history of life insurance, hundreds and hundreds of people have been killed because of the power they understood what it could be. If you have your father is 80 years old, the guy is not dying, then the children want to do their best to kill him so they can get money. In the history of life insurance, it's there, and eventually over time they start implementing laws to protect actually the people who are the policy owners. And that's it's real out there. It's real. It's not a joke. I completely understand. Okay. So now if you said you're gonna acquire term for 10 years with only $12, that's about two cups of Starbucks coffee. You can be covered for $500,000.
Wow.
And if you said you have term, because we are adults, we're gonna go at least to term 30 years. You can acquire that for just $30 a month. With $30 a month, you are covered with $500,000, you guys. I'm saying $500,000 and living benefits. I mean, come on.
Wow.
Let's go here. I started with $500,000. Now let's see what you can acquire with $1 million.
What?
With a $1 million policy, if you go for term, a translator, what we call it in our technical language, a translator term, translator LB, with 10 years, you can, with $23, you can acquire a life insurance in a value of $1 million.
Wow.
Just let that sink in, guys. Just let that sink in. What can you do with $1 million?
It can change
what
your
can
life.
you do with having access to $1 million or leaving $1 million behind for your progeny?
Yeah.
Let that sink in.
Don't have to college.
And I told you it comes with convertibility. You can convert it into a permanent policy. You can extend it. It's just amazing. Where, you know what? It's not taught anywhere. It's not taught in school, except someone like me and all the amazing people I work with in my firm. We go out there, we teach people about this policy, the existence of these plans, and the power behind it and what it can do for you and for your family. And each family, I believe, should have it. That's why we say, hey, we have a cure for financial illiteracy. That's why we go out there, we educate people, we help people. We want every single family, every single individual every adult should be having these policies. Every adult should be having, and I don't see any reason someone who's working whatever job cannot be able to save $30 a month. That's $30 a month to get covered. That makes no sense at all. So that's why my job is to do that. And I always ask folks, if you know somebody around you that is not covered, please don't hesitate to introduce me to them. I'm happy to educate them. I'm happy to show them how this works so they can protect themselves and their family. Don't hesitate. People need it. And I'll ask you questions, Jerry. First of all of us in this platform, we need it. And eventually I have had it. I got different insurance plans. Don't come kill me, of course. That's a joke. You are not my beneficiaries, and my beneficiaries don't know. So
and we can adopt them.
Oh my God.
All right, let's keep rolling. So I only talked to you guys about the power of a term policy, right? I showed you about living benefits, what living benefits that to you. But now let me talk to you about the permanent policy. If you guys were curious about, I talk about a permanent policy acting like your personal bank. Can anyone answer the question? What did I mean by a permanent life policy becoming your personal bank?
I mean,
anyone can explain that concept, or how does it resonate to you?
Having access to money whenever I need it.
Yeah, that's one thing.
Having my money grow, like at the bank with
yes,
with the interest.
Yes. So now we're gonna be tying how a life insurance policy, which is not a traditional life insurance policy, is being tied to the market. We have to understand the market. We have to understand here now what we call the concept of compound interest. So the life insurance, the smart people of this world, they came together, they studied traditional insurance policy, And the wealthy people are always looking for ways to grow their money, protect their money, and they, have tax advantages. So they're creating different products all over, throughout the years. They've been creating different financial products. Okay, so one of them is including inside the life insurance policy the power of compound interest. The power of compound interest here just means, let me see, before me explaining that, I would love to ask, I'm gonna go back to, no, I'm gonna ask Paul this time. How can you explain compound interest or the rule of 72, if you're aware of it?
The rule of 72, I forgot. I think I heard it in 2 presentations, but it's not clear in my mind.
So compound interest, rule of 72, is a concept developed by Albert Einstein. That's the German who naturalized American crazy air physicist. Is the father of nuclear bomb, or the nuclear formula, which means, E equals mc squared, just means energy equals mass plus speed of light squared. So something like that, if my memory is good. All right, so it just means how much time it's gonna take for your money to double based on the interest rate you get. So now, if I were to ask, is Remy still there?
Yeah, I'm still here.
Oh, he's still there. Okay, fantastic. Do you know how much interest rate you're getting on one of your banks, the institution you bank with?
Right now?
Yes.
You should ask my sister. Her bank at her bank.
Okay, fantastic. So
Colum. Yeah, Colum. So you tell him how much interest we get charged.
0.01 or 0.02.
So now let me explain this. Basically, most banks, mainstream banks, give you 0.01% interest rate. If you are doing business with credit unions, they may give you 0.02% or maybe 3%, but basically less than 1%. So 1% is they just don't do it. So how does this work? Let's say, Remy, you are 29 years old. At 29 years old, you put $10,000 in the bank. And let's say it's not what the bank is giving you, but let's say the bank is giving you 1%. So if you take 72, you divide 72 by your interest rate, in this case is 1, how much the number you get is 72. So which means it's gonna take 72 years for your money to double. So at 29, if your money doubles to $20,000, you are going to be 101 years old. We know most of us not gonna live to a century old, right?
Right.
So now let's see your bank is giving you 4%. Just by the fact of getting 4%, 6%, 10%, whatever interest rate you get, just divide 72 by your interest rate. The number you get is how fast your money is gonna double. So you can go from 4%, you start with 10%. By the time you're 65, you see how fast it doubles. And by 4, it doubles every 12 years. 10%, it doubles every 7 years. And guess what? Imagine getting 24%. Your money is doubling every year, if not every 6 months, if not every month. So that's the power of compound interest, the power of interest rate. Even Albert Einstein, he quotes the compound interest is the eighth wonder of the world. The person who understands it earns it. The person who doesn't understand it pays it. So for now, we understand the power of interest rate and how that operates and how that operates inside the life insurance policy. We gotta take those benefits. So now let's look at this. Second role of money is just how money grows. We talk about fixed strategy. Fixed strategy, it just means you're not getting any interest rate. You can see my diagram here. In my diagram, it's flat. Imagine do you remember when someone is in a hospital, they're being monitored by a machine? When the machine goes flat, what does that mean?
They're dying.
And all your money into a bank that has this, that's a dead money. There is no growth, no fluctuation. You can come back, you're gonna, whatever you left, the matter of fact, you're gonna lose value because of the inflation.
Yeah.
And now you have the strategy variable, that's the stock market. It's variable means what? It's inconsistent, it's not
Yeah.
reliable, it goes up and down, it's unpredictable. And versus here you have what we call the index strategy. It means your money is not directly participating in the market. It's just mirroring the performance of the market. When the market is going up, you capture, you make money. When it goes down, you got these locks, they come in and it locks in your gain. So when the market picks back up, you start making money from where you left off. And then so on and so on. So when you don't make money, you make $0, you make $0, let's say zero dividend. In that moment, zero is your hero. Your money is always protected. So now how can you have this index strategy included into a life insurance policy? Well, let's talk about tax. We see already some of the benefits, why the wealthy people are going towards that, and how to talk about tax. This is just to let you know I'm going towards the power of life insurance with these strategies. We don't money get taxed now. Your savings account, you pay taxes on it, your CD, certificate of deposit. You pay taxes later in accounts we call, those are some retirement plans, such as a 401k, or you can have an IRA. You pay, if you have such an account, you're not paying taxes on them right now, but you're gonna pay taxes on them later at the retirements. And then you have tax advantages. Tax advantage account just means you are either paying maximum, you are paying minimum taxes or zero taxes. And one of them is a Roth IRA and cash accumulation insurance policy. So, Remy, have you heard about a Roth IRA before?
Yeah, I think so. I heard that name before.
Paul, have you heard about Roth IRA before?
Just right now as I'm studying, but I've never heard of it before. I mean, maybe I stumbled upon it, but it's not.
So Roth IRA, it's just an account, a tax advantage account that you contribute your money. It's a retirement account. You contribute your money. When you access that money, it's completely 100% tax-free money. Why 100%? I'm going to explain this with an example before we wrap up here. Okay. So let's say you are a farmer, you're growing, I love peanuts. If you're growing peanuts, if you have a small bags of seeds of peanuts, okay? If you plant those seeds, it's gonna go, you're gonna have more peanuts and more bags of peanuts, right? Okay, Paul?
Yeah.
So if you were to pay taxes, would you want to pay tax on your small bag of seeds or on your big harvest? What would you choose?
I mean, the one that's gonna be the cheapest.
Yes, your small bag of seeds.
Yeah.
You pay taxes on when your money is here, your bag, or your money is small. When it grows, you can access your money tax-free. That's what just means here. Okay?
Yeah, okay. Oh, wow. Okay. Yeah.
So now the catch is this. In a Roth IRA, you can only contribute up to $6,000 a year.
Oh, okay. There is a ceiling.
There is a ceiling for that. If you have a cap of $6,000 a year, but there are people making millions of dollars a year, right?
Yeah.
So if you make $1 million a year, you want to take tax advantage. If you have a choice between a Roth IRA and a cash accumulation policy, what would you choose?
I mean, I think the cash accumulation, because the Roth IRA only has a limitation of 6,000.
That's a limitation, but here you don't have limitations.
Yeah.
That's why they came with that deal. If we have no limitations, we can take tax advantage. We gotta include this plan into insurance policy, and bam, that takes us here. You pay taxes on pay taxes on a gross, you pay on that, they put it here, and you can get interest rate up to 25%. You get the protection, you can set it market correction protection. You can have it can be like a retirement plan, emergency, college fund, anything. We structured based on your financial goals. That's just what it is. And now we go here, and some companies are gonna offer you free solutions. You can have family bank strategy, you can have living benefit, you can have funeral concierge, all in one policy. So you are covered in all ways possible. And then you still have access your money, growing money, your money working for you. You're growing in the market. you can access that money whenever you wanted to offset, give yourself a vacation or whatever, and all that tax-free. So now let's come here. I'm gonna give you an illustration and then we're gonna end up here. So let's go, let's see the power of this thing. Are you guys ready?
Yeah.
Are you ready, Remy? Is everybody ready? I would love to show. This is the last one. I'm gonna show you the power of this thing, and anybody taking advantage of this, anybody can implement. You have the means as you go make more money. Excuse
Yeah, we
me?
can hear you.
Okay, fantastic. So you can see my screen, right?
Yes, we can.
So this person is 30 years old, okay? This just means what? Total face amount means that's the policy value. You acquire the policy, say, okay, we're gonna give you we're gonna cover you for $500,000 because it comes under the umbrella of insurance. It has to come with face amounts. The death, that's also called the death benefit. The death benefits. In a traditional insurance, that's all you got. The death benefit, you pass, someone takes that money, right? By year, you're gonna see how it works as your personal bank. So this person is contributing $500 every month. Okay, so now target premium, the company's gonna say if you do $500 every month for 1 year, that's about $6,000, right? So the company's gonna tell you, well, if you cannot contribute $6,000, at least you have to reach $4,000. And 7 pay premium here, the company's gonna tell you, well, you know, you have in 7 years, you have a way to put $6,000 a year, but if you wanted to put more money, you can put up to $28,000. So you see in the difference of a Roth IRA, how much room they're giving you to put more money into your account. And then if you had a lump sum, they can tell you in the guideline premium annual, you can put $20,000 if you have it in a lump sum. And also here in a guideline premium, for some people, if you say, oh, I got some money for my dad, my grandmother, you have up to $98,000 of a lump sum, which means you can put that money and then forget about it. Your money is gonna go in a compounding interest strategy. That's just what it means. And then let's say here, you contributed $500, right? Okay, let's say you lose your job, you have a hard time, you cannot pay $500 a month. So guess what they're gonna tell you? Okay, you have a minimum of $150 every month to contribute. You see how they give you way to save your money. You put money, you can go low as, do you imagine going for $500 to $150 a month? That gives you a break. And eventually when you can, you get another job, you can come and overfund your policy. So now let's go down here. I'm gonna try to magnify you so I can explain. And this is really important, Remy and everybody, to just really, I don't think I can magnify this, but it's okay. So this is how we're gonna break. It's an illustration. This is illustrated at 7%. So this is the years, and this is the person is age 30. So the first year this person get turned to 31. This is $6,000 annual. So look at this compartment right here. Accumulated value is basically what the money is accumulating inside your policy, okay? And surrender value, do you guys see this column right here?
Yeah.
This is your bank. This is your bank. This is the money you can access whenever you wanted to for do whatever you wanted to tax-free. So you are contributing, your money is growing inside your policy. Now we're setting and increasing. So look at this person. We said the death benefit was $500,000, and look at how we set also in increasing. And the company, because it comes with long-term care, they give you all the way up to $500,000 of long-term care. It means if something were to happen to you, you are covered in a value of over $500,000. So by the time the person is 45 years, the money keeps increasing. They started with, putting $6,000 a year. They are $100 a year. The face value has increased to $6,000, and they keep going. So let's say they get to age 65. I design it to age 65. Let's say at age 65, you have contributed $500 a month And the total accumulation is, can anyone read this number for me?
Oh, 210.
Okay. Imagine you have saved $210,000, okay?
Yeah.
And look how much do you have here?
Okay, 506. Wow,
Yes.
I can't even number.
Let's just say $500, $500,000. And now how much do you have here?
A million.
So now if you were to pass $1 million plus $500,000, that's
Really?
$1.5 million that go to your daughter.
No way.
How much total did you put? $210,000.
Oh wow, wow.
You put total $210,000. Your money has grown to over $500,000 and so you can access this money. Do you see that?
Yeah.
If you didn't have the money at retirement, this is how much money you have. That's how much protection you have for you, for yourself, for your family.
What is the percentage?
This is at 7% only.
Wow. So is there a policy that gives you a higher percentage?
Of course, this is just the base. The cap is 25, the cap,
24.
depending on the company, it can be $15 to $25. I mean, sorry,
No way.
15 to 25%.
No way. Wow.
Yes.
So you can have double that percentage.
So imagine this is an illustration at 7%. Imagine you were getting 15%.
Yeah.
These numbers are double.
Yeah. by just putting $500 every month.
Just that. By just putting just that, you can you can borrow money against your policy. You can ask them, and you can pay off your debt. You can pay off your house, your mortgage. You can finance a project. Start a business. Your money is still growing inside. You're using all the people money strategy. That's what it is. Or now let's say what I do. Imagine you have this. You have 2 policies, or you have a term living benefit. You say you don't touch this money. So now let's say this person doesn't touch this money until age, let's say, people are living longer. You reach age 80. At 80 years old, you only put how much money? You remember how much money you put?
$210,000.
How much money you have here now?
$1,192,000.
And how much money you have here?
Yeah.
So you have over $2 million.
Yeah.
You see that?
Wow.
And let's say you,
even
if we say, let's say you live until 100 years old. Let's say you,
with everything falling off your body.
Let's say
hair, the teeth, the skin.
Yeah, but you know what people create, how people create generational wealth.
Yeah, you're gonna leave it.
But people, they used it. You have $1 million. That what you gonna eat? You're gonna how much food you're gonna eat every day too?
Yeah.
How many how many cars?
I mean, that's just for traveling and then going to nice places, first class.
That's just for living. That's what it is. So imagine you live until 100 years old. How much money you have here? You only put. Remember how much you put?
Yeah.
How much you have here?
Yeah.
You have nearly $6, $7, $8 million.
Wow.
So imagine now you have 3 of these policies, 5 of these policies. People have 10 of these policies.
That's right.
Sign me up yesterday.
So,
oh my God.
The only time to start, if you did not start, you say, sign me up yesterday. If you didn't start 20 years ago, the only time to start is now.
Yeah. Yeah. And then this is just for stimulation with 7%. So
of course, this is just a 7%. If the market you capture 10%, you remember I told you about index strategy, right? The market perform at a certain rate, you capture it. The market goes down, your gains gets locked in. When the market
Oh.
comes in, performs again at whatever rate,
You go, you
own-
cash it.
you
Oh.
capture with that. The market goes down,
Wow.
you don't lose money. You capture it.
Yeah.
That's why the family like Rockefellers, they have all the things, and then they
Yeah,
create a
that's
trust
cool.
fund.
That's
It
true.
was created for the rich, tax advantage. And
Yeah.
imagine you
Yeah.
are
Now I'm gonna get
accessing
it.
it tax free. Let me say it. Let me say it again. Tax free.
Guys, it's better than winning a lottery, because when you win the lottery, they take
You
half
pay
of
the
the money.
Oh
taxes.
yeah. Well,
Yeah, they
lottery,
take
you
half
win
of
a
it.
lottery,
Yeah.
you pay half of the money in taxes.
Yeah. It's
So
gone.
imagine your children accessing all this money, millions of dollars
Yep.
tax free.
Yep.
People
Yeah.
say the rich
Wow.
don't pay taxes. The rich, yes, they do, and they don't.
Ah,
Mm.
take a tax advantage.
That's what it is. So to finish here, I believe this is my last slide. I will say this is what we do. We do personal financial analysis. If you know somebody that may benefit from this information, please don't hesitate to introduce me. That's why we do this. We can show families, we can show people how they can use these vehicles to protect themselves and family, create wealth and legacy. And also in our industry, we offer opportunities to increase cash flow. You can work with us and make money while you're educating others. That's what we do. We don't work in a traditional industry. And some of the things we do, college planning, debt management, we talk about it, create emergency fund. You saw the numbers. 44% of Americans don't even have $400 set aside to face an emergency. Statistic, and that's fine. With COVID, we all saw it with COVID. Everybody was broke. We go there, we do proper protection, build wealth, preserve wealth, we do that. And what's most important for you guys? You got to assess it for yourself. We come, we sit, we're going to do exactly the same thing wealthy people are doing. Create an index fund, create your family bank, you perform like your own family bank. That's just what it is. Okay, so
That's right.
that was for me for today. And I hope I didn't abuse of your time. It's 6 minutes to 7:30. I love to be respectful for everybody's time. If you have any question for me, please ask me. Other than that, these are the things, because you guys are in the industry, we're going to be learning about this thing and spreading this word about this thing. Yes, Colum.
Yes, I think I was a little bit sleepy. By that time, I missed it. The term life insurance, what do you say it is? What is the term life insurance?
The term...
the term policy.
Yes. What about it?
How do you define it in shortly? Just a little resume.
Yes, a little review. I'm happy to go back with you. So term policy, I say the term policy, you can have access to a new term. You have the old term, it comes with a limit. It's basically you acquire it for 10 to 30 years. It comes only with a death benefit. If you pass, your family get the money, right? So you're beneficiary. And the new term, you can access your money in the case of critical, chronic, or terminal illness. And also it comes with comfortability. After 5 years, you can convert it into a permanent. Permanent here can be a whole life universal variable index. And also before it expires, you can extend it. And then that's what the term is, living benefits. Okay. I know not every company offers it. I know the company who offer this, they offer it because of this amazing benefit. That's what we teach people about. Look at, you can have a permanent, you can have a term, and it's accessible. And I showed this, how accessible it is. Imagine this is just a person who's 30 years old. I can show at any age people are, but this is just to show how accessible it is. This person 30, they're putting, this is a policy of $500,000. To acquire this policy, you only have to pay $12 a month if it's a term 10, or $30 a month for 1030. That's it.
So it's a limited insurance. So it's not the best insurance.
No,
right?
it is an amazing product. It is amazing. Why is it amazing? Because it comes with living benefits.
Okay.
Imagine owning a home like last year, you were able to access this money to pay access $500,000 to pay off your mortgage, Not, well, I mean, what else do you know? What else do you know out there that can give you that? The only thing that doesn't come with a term, it doesn't come with interest rates, like with a permanent withdrawal. There is no interest rate, there is no cash value to it.
Yeah.
There's no cash value.
There is no cash value. But personally, what do? I have my permanents, I have my cash, my term. Why?
Yes.
Because if I had, let's say, imagine you have $1 million here, right? And if you have $1 million on your permanent, so if something were to happen to you, instead of the money coming from your permanent policy, your money is going to come from your term. So all the money in your permanent stay remains untouchable.
Stays there, yeah.
So the term protects your permanent policy.
Okay. Protect your permanent. That's
your
a good
term protects your permanence. So that's your permanent is your personal family bank. Compound interest, you're going to leave your money keep growing. You're not destroying, stopping the power compound interest. You are settling with your term if something happened, an emergency happened to you. That's the power of combining those strategies. Or you can have what else I have? I have Everest. Everest, but you know what? That's just my strategy. If I pass away, I don't want neither my term or my permanent to be touched. You're gonna bury me with my Everest policy, send my body to the Congo, I'm fine. And all this money from here, from over there, I leave behind all my kids, they become millionaires before even knowing it. That's the strategy you have, and it's so accessible. You can do it. Anybody can do it, but you need to have the knowledge. You gotta know. You gotta see it.
Yeah.
It sounds too good to be true, but it is really true.
Yeah.
It's
I have
really,
another question.
yes, please.
Is a term policy the same in every state and in Canada?
No, the term policy is pretty much the same everywhere if it's a traditional term policy. But if it's a term with living benefits, it's not the same, because normally not all companies offer it. The companies that offer it because they want to be competitive, and not many companies want to keep up with this benefit, want to offer that. Okay.
Yeah.
So not every company offers it. Each company have their own product. Sounds good?
Yeah.
Yes.
Yeah. Okay.
Each company has its product.
So then, when you're in a different state, what would you advise your client to do if they're looking for more product like that? Because
I mean, it doesn't, as long as you live in the United States and you live in Canada, as long as you live in the United States and you live in Canada, we got you.
Okay.
Yeah. We got you.
Okay. I had a question, but now it's not
it's fine.
fresh.
You know how where to find me. You can text me a question if it pops up.
Okay.
Any other question? Well, if there is not a question, I appreciate you. It's 7:30. I like to be respectful of time. Okay.
Yeah, thank you. This was great. Thank you.
Thank you, guys. And these are the things you guys okay, let me what's this?
Wow.